Here's another example of the very bullish configuration. That is, notice the slows position above the zero line. Notice how, other than those 1 or 2 bar penetrations of the slowest of the STXs, prices are remaining above them. They are remaining bullishly fanned out, and of course all of this is occurring above the ocean regular moving average, the NMA. So in this bullish phase here, we get a little conjunction right here. This one I bring to your attention and have marked simply because it's one of those locations where we've pulled back. Notice that the severity of this pullback was significant enough to drive both the fast and regular component 4 line below the slowest, but the slow is still holding above the zero line, and significantly the fast and regular, while finding a bottom at the zero line, are also below their lower standard deviation bands. It's the kind of place where if there is to be a move back to the upside, this is where I would expect one. And the market simply advances. We get to overbought, we pull back, we get to, this time, an oversold scenario. Now what happens is that the slow line starts this oscillation. It has a generally bullish trend. Notice that the market is generally bullish through this phase, but with heavy oscillation, which would be the kind of thing that our BTXs would be picking up. But notice that due to the nature of the slow component 4 line being very near the zero line, the trend is still bullish but questionable at this point. I would almost view the slowest of the component 4 lines hugging near the zero line as a similar situation to the BTX having a trend score below 35. There is a trend present by virtue of the slow line being above the zero line, but the trend is not very strong, hence the slow line is very near the zero line. That in and of itself should be enough for you to start thinking in terms of, okay, now instead of expecting shallow counter-trend reactions against the primary trend and powerful thrust in the direction of the trend, I want to shift my thought processes away from that kind of mode to basically selling tops and buying bottoms, thinking that this market is range-bound. And again, that's a large leap to make from just this one tool, but it's the kind of thing that I've seen over and over again, and is also the kind of thing that the BTXs would definitively prove for us. So, if in fact we have shifted from this mindset of buying pullbacks, expecting the big thrust in the market to be in the direction of the trend, and minor pullbacks to be occurring against that primary trend, here, we've gone into simply selling tops and buying bottoms, expecting more uniformity in terms of the magnitude of their moves. So here's a good top identification by virtue of hitting the upper SD bands on both the fast and regular. Here is a case where the fast reacts enough to come down to its lower standard deviation band, but the medium does not. However, that proves to be a tradable low. We advance yet again into another top, where the fast gets above its standard deviation band, in this case, as does the regular. And as we can see here, prices are outside the upper standard deviation bands of the NMA, something else we've been taught long ago basically to treat as topping formations. The market then sells off yet again. The fast drops to below its lower standard deviation band. So does the medium speed. We're setting up a tradable low. The market advances. We get above the upper standard deviation band. And by the way, I haven't mentioned it much, but look at the angularity of the turns here coming from the shadow, confirming all the information that we believe to be true by virtue of what we see here in the component 4 line. We get back to this next top. This one forces the fast to its upper standard deviation band. That's not true of the regular, but it provides a tradable top. This time we come into a bottom as well. Here, neither of the oscillators are hitting their standard deviation bands, so this would have been a little bit trickier to try to determine what was going on. We go back into an overbought situation. Now at this point, we get one final bounce to the upside in what I would consider a near singularity, that is fast on top of medium, which in turn is on top of slow. And we get the last bounce up to a top. We get some divergence in there, and then we get the crossover, and notice that the magnitude of the decline of the fast, and for that matter the regular as well, exceed any of the other lows that have been made prior to that time. I'm talking about the fast oscillator now. when this oscillator starts with a very steep angularity, which we discussed, and the magnitude of that decline exceeds the magnitude of the other declines that had taken place, particularly the waning magnitude. Notice we were basically making a triangle here even out of the oscillator, in effect coiling up in that location. It tells us that something new and different is happening. And we get the bearish singularity at this point right here as the market sells off again, and we had a singularity or a conjunction taking place from the STX as well. I'll give us just a couple of more examples here, but again, I cannot stress the significance of these locations where the fast and or the regular component 4 line come down to their, in a bullish climate, that is a position where the slowest component 4 line is positioned above the 0 line. What we're looking at are places where the fast and the regular come down to the 0 line and or to their lower standard deviation bands in a conjunction type formation, which is exactly what we had occur right here as the market then generated a very powerful thrust back to the upside. Notice again the 2-bar penetration of the slowest of the STXs. Where does the market make it up to? It makes it up to a location where the fast, and in this case even the regular, it's a little hard to see, but the fast and regular are both outside their respective upper standard deviation bands, this time in the direction of the trend. So we expect a pause and, under worst case situation, a reversal. But if the reversal is to take place, the market will tell us such. Notice also that this was one of the locations where prices were outside the shadow line, which is another thing we discussed, and prices were outside the upper standard deviation band of the NMA. So the pullback here to the 0 line, slightly below and slightly above for the fast and regular, were very good buying opportunities at that point. And the market simply rallies higher, ultimately culminating in hitting the upper standard deviation band at this location right here by virtue of the fast and of the regular speed, all still bullish. And then as we form the top, basically what happens is, first the fast cuts decisively below the slow, below the 0 line. In the process creates very sharp angularity, takes out prior lows, indicative of showing the strength of this new thrust to the downside, and we get the crossover of the fast below the slow, below the 0 line, and ultimately the slow then below the 0 line. So we now have entered into sell mode, and of course all of that, by the time we enter into sell mode by virtue of taking the slowest of the component 4 lines below the 0 line, at this point here, everything that we know to be true about the STX analysis has already happened. That is, the fan to the downside in a bearish configuration, fast below medium, which in turn is below slow, which in turn is below the NMA, has all taken place. So we're now into a mindset, basically, of attempting to try to sell rallies due to all those things. So here is a rally to be sold. We have a triple conjunction, fast, medium, slow, all coming into a singularity, with the fast and regular above its upper standard deviation band. We then get a trend thrust into a low. We make the turn at that point, and we rally back to a position where the fast comes back to its upper standard deviation band and to the 0 line, and the medium speed comes back to its standard deviation line as well in the counter trend reaction. Then yet another trend thrust to a low, and another grinding counter trend reaction, in this case that does very little upward movement in prices. We get yet another singularity at this point with the same set of conditions occurring, and a new trend thrust to the downside. All of this confirmed, by the way, by virtue of everything that we looked at in the STX. To recap what it is that we're looking for predominantly from the component 4 line, I think there are basically 5 patterns to be aware of. Of course, the fan, as well as the location of the fast and the medium lines relative to their respective upper and lower standard deviation bands, and those can be very powerful indications for you. Also, the location of any of the 3 oscillators relative to the 0 line, in particular the location of the slow, because it's the primary trend determinant. Then, of course, conjunctions, the 4th item, and standard deviation band pinches, though I didn't take the time to identify any of those in this examination. They do happen.